Hello everyone, I'm Rachel Southhorn with Stock and Options Solutions. I'm going to do a quick overview today of deferred tax asset or DTA balance calculations, followed by a demonstration of how the SOS DTA balance proof application and review process can take the burden of calculating your DTA balance, a process that can take hours, days, or even weeks depending on the size of your data set and be prone to human error, off your hands while providing proof out against two data sets to really please your auditors. Now, it should be noted that this presentation and the current form of our SOS DTA balance proof application is specifically designed for use with the Equity Edge online platform. So if you are using a different platform to calculate out your expense, please let us know. The first thing to discuss is the approach that our DTA balance application uses. This is actually the approach SOS had been using for years in spreadsheets for a number of our clients. We took this approach and incorporated it into an Access application that guards against manual data entry errors and formula processing overload that you can have when you're using Excel. We start by considering the DTA for the DTA that's remaining for vested shares. We assume that all expense has been recognized for the vested shares because that's a requirement of the accounting standard. However, some of the vested shares may have been either exercised, released, or canceled, and that DTA needs to be reversed out. So, the calculation for determining the remaining DTA for a vested tranche is very simply the fair value per share times the number of shares that remain outstanding in that tranche. For a tranche that is unvested at the end of your reporting period, the expense amortization is either in progress or has not yet even started at the end of your reporting period. So for the unvested tranches, we actually retrieve the expense from the expense report at the tranche level. And if you're still using a forfeiture rate after the adoption of ASU 2016-09, this does include the haircut adjustment for estimated forfeitures because the DTA balance should also include this haircut. All right, so now let's talk about some of the features of the application itself. The DTA balance proof application does distinguish between different types of grants and will not book any DTA for incentive stock options because you cannot anticipate a tax asset for those. It does deal with non-unique vest dates very well. If you do or you did use the vest date as your unique identifier for expense, that can cause issues if you have the same vest date twice in a grant. With the lookup between the expense report and the shares outstanding report, the application deals with that by assigning a unique ID to each tranche and associated with both reports so that they can tie back. And one of the most compelling reasons to let the DTA balance proof application calculate your DTA is that it can handle really large data sets. And when you're dealing with many years, and in particular if you have a monthly vesting schedule, that data can be hundreds of thousands of rows, which can throw off Excel and make your formulas hang up and, again, just be prone to error. So the application takes all of that time and that propensity for error out of your hands. It also can handle whether you're doing a true-up for actual forfeitures at vest or at the actual forfeiture date. So if you true up at vest, you may have expense that's still amortizing and DTA that's still sort of on the books, even though shares are not outstanding, and the application can handle that. And finally, the application itself will validate the DTA application calculation against the calculation that you would come up with if you were using the tax benefit reconciliation to back out DTA. Provides a grant-by-grant comparison, and our subject matter experts will research those variances and let you know what they come from, which is something that the auditors really appreciate. There are a couple of optional features. One is cost sharing. So if you know what this is, then you probably need it. But we can identify employees based on their department or country or another identifier and calculate out DTA just for a portion of your population as needed. And when it comes to DTA, there is a difference between short-term versus long-term. And with options, we don't know when that DTA, that actual tax asset's going to be realized, so it's difficult to determine whether it's short-term or long-term. But when it comes to RSAs and RSUs, we can leverage the app to calculate out which parts of the DTA would be considered short-term and which would be considered long-term. There are a few limitations to the application, and then they can all be summarized in any data that is outside of your Equity Edge Online database cannot be captured with the app and will be something that needs to be handled outside of the actual application process. The top 3 reasons that this happens is, first of all, grants to individuals subject to the 162M tax deductibility cap. If we have grants that need to be removed from the asset calculation, we'll need to do that outside of the application itself. The second is options that have been in option exchanges or repricings, and this is because there is a disconnect between the parent and child grant expense and reversal, and sometimes we end up with orphaned expense and therefore orphaned DTA, so we'll need to look at that if you have any of those exchanges or repricings. And the last is the most obvious, but any grants that are currently being expensed or have been expensed and still have outstanding shares outside of the database of record. The most common reasons for this are non-employee grants, modified grants, or performance options. The process is very simple. We'll start with a kickoff, which begins with your completion of a DTA questionnaire. This questionnaire has all of the data points that we'll need to consider when determining how much time is going to go into preparing for and reconciling out the DTA. We'll need you to provide us read-only access to the Equity Edge Online database, including the ability to create custom reporting. This allows us to create the reports that are needed for the DTA balance application. And then we'll review all of that data, have a kickoff call with you, and be ready to get started. The actual process itself, our subject matter expert will create the custom reports required and run those reports in a pipe delimited text file, Excel, and in PDF. The text file is what goes into the application for calculation. The Excel file is what we use to research any discrepancies or scenarios that we need to see. And the PDF is just there for your auditors to look at to prove out that the data that went into the application is in fact the data that you see in the Excel file if research is needed. Once all that's ready, we load the text file into the DTA proof application and create the output. The last step is for our subject matter experts to analyze the results. And this is where we take that grant level variance between the DTA balance application and if you had used the tax benefit reconciliation to come up with deferred tax asset, any variances are explained away or identified as issues that need to be resolved. When that's finished, we'll provide the results and all of the original data files for you to keep as your records through our secure data exchange. The information that we need to collect, and this is all part of the questionnaire that we provide. The first bit is the information that we'll need in order to run your expense reports, which is the as of date that we're using, so the end of the reporting period, typically the year if you're doing it annually, could be the quarter if you're doing a DTA balance more frequently than that. We need your adoption date and method of adoption for FAS 123R, and to understand whether you're using straight line or accelerated method for expense, whether you're using a true up at vest or the true up at actual forfeiture for your expense, and if you are still using one, we need the forfeiture rate. And it's important to note that the forfeiture rate should be applied at the grant level so that the report can be run with one single output. In addition, we'll need to collect your country tax rates for any DTA that you're booking. These rates get dropped into the summary sheet, and I'll show that in a minute after the application has done its part of the job. We'll need to know if you have any vest schedule adjustments that have actually changed the number of tranches. The DTA Balance app will identify these variances for you, but it's helpful if we know in advance what we're going to be looking at. If we're helping you with 162M, we'll need to know who is subject to and which of their grants would be capped out and not part of the deferred tax asset calculation. And we'll also need to know if there's any expense done outside of this system that may need to be loaded in afterwards, including any grants that were done outside of the system, not just ongoing, but if you have grants that are still outstanding and their expense was done outside of the system, non-employee grants, modifications, and liability accounting that hasn't already been loaded in. We're going to run 4 reports to do the application. The first is the Valuation Disclosure Recap Detail Report. This provides us the shares outstanding at the tranche level and by vest date. The Expense Allocation Recognition, we'll run that from the beginning of your 123R adoption through the end of your period that we're calculating DTA balance for, and all of those inputs will be the same as when you typically run the quarterly expense reports. We'll use the personnel summary to pull in the grant date, grant type, and shares outstanding as a cross-check. And then finally, we'll run the tax benefit reconciliation to validate the deferred tax asset calculated by the DTA balance proof application. So now let's take a look at what the output would look like. So after we have pulled those reports in and the DTA balance has come back out from the application, this is the report that you'll see. The first page is a summary, and here is where we'll drop in those tax rates. So if you're only calculating out your tax rate for the United States, let's say it's 42%, we would do a straight up calculation between the total pre-tax DTA. We'll apply the tax rate to come up with a tax-affected DTA for you. And this can be done for any of the jurisdictions that you're calculating a DTA for. If you were using the cost sharing, we would also have outputs here for your non-US, for your US DTA that's coming in from other countries as part of that cost sharing. The DTA balance tab that you'll see calculates out by tranche, by grant, the number of shares outstanding, and therefore the number of vested DTA and unvested DTA by country. Once we've got all of this down, we go into our grant level testing. And this is where columns A through J are output directly from our application. Columns K and L are what our subject matter experts will add for you. So we're taking over here the grant number itself, what grant type we're dealing with, how much DTA is booked. So again, for your vested shares, this will just be the fair market value times the number of shares outstanding. And for your unvested shares, it'll be pulled directly from your expense reports. You can find this by tranche level on the DTA balance tab, but this is summarized by grant. The reversed DTA, this comes from the tax benefit reconciliation and is not part of the way that the DTA balance application calculates it, but comes up with your booked minus your reversed. This would be your DTA balance if you were using that methodology. It pulls in the sum for the DTA balance that the application has come up with and determines if there's a variance. When there is a variance, we can find out why by researching the grant itself. So we come up with an absolute variance to help out with the total variance that we're dealing with, and then we make some notes as to what that might be. So as an example, sometimes we've had situations where the tax benefit reconciliation report is not reversing the right amount of expense. And so we would note that with being that because there are 0 shares outstanding, we shouldn't have any DTA, and we definitely don't want to have a DTA balance that's negative. So the application is actually calculating out the correct deferred tax asset. We have some where we'll have a small variance, and this is because the rounding in the expense report is not always the same as the rounding in the tax benefit reconciliation report by very small amounts. And so we'll see a very small variance here between what the application is calculating and what you would get if you use the tax benefit reconciliation. And then sometimes we have issues that need to be resolved. For example, we may have, this is a situation that has come up on multiple occasions where we have a restricted stock that has vested, but the vesting has not been processed yet. And so there's a discrepancy between what the app is calculating out and what the tax benefit reconciliation will show, because that vest hasn't been processed to be reversed. So this is an example of something that will need to be resolved before we can finalize the DTA balance. And that's it. This is what you get out of the application. It's very easy to provide to your auditors. It summarizes everything in a way that you can then impact later. If we need to pull out certain bits of DTA for 162M or add in some DTA for grants that are outside the system, it would all be done on this summary page for you. And that's it. If you have any questions about the SOS DTA balance proof application and the process, please feel free to contact Stock and Option Solutions. Our phone number is 408-979-8700, or you can email us at info@sosteam.com. Thanks for joining.